Hey everybody, Tony Harrington here. Listen, just a quick shout out for everyone. People are a bit up in arms about interest rates rising. Will the property markets crash? Well, listen, here's a few reasons why the markets won't crash and why properties are going to be still sitting pretty strong and pretty stable over the next 12 to 18 months. Okay, so listen, there's three reasons why the market won't crash. There's three buffers in place right now. Okay, one is people have got record savings. People have got plenty of money sitting behind them in the bank, right? COVID, pandemic, 2 years, a lot of people have done really, really well. Also, a lot of people are 1 to 2 years ahead of their mortgage, right? So if they're way in front, doesn't really matter. They're not going to be affected because even if it only went up 0.25%, right? So don't freak out about that. The banks also have a 3% buffer for you, right? So that means they're assessing you, if your interest rate was 2.5%, they're assessing you at 5.5%. And what that means is that they're saying, hey, if rates go up by 3%, they believe that you can still comfortably afford the repayments. So look, one thing we've known is that historical evidence shows that when interest rates rise, property markets do not crash. Okay, we've seen that in history. We've seen it back in the early 2000s, and we've seen it again, 2008 and whatnot. And folks, there's no need to panic. Keep your cash flow under control. All right. So look, here's what ANZ predicted. They said, hey, they expect unemployment to fall, around about 3.3%. Okay. They also expect wages to grow. I know at the time of shooting this video, there's an election happening in Australia. We don't know who's going to be in, who's going to be out, but they're all talking the same talk. Wages growth will happen because inflation's happening. So wages growth, prices go up, etc. It's all relevant. House prices rose by more than 50% during the last tightening cycle of when interest rates were going up between 2002 2008. Property on average went up by 8% per annum. Okay, 8% compound growth. So look, any correction in the housing market, look at the boom that we've just had, right? With property prices have gone up 30, 35, 40, 50%, some areas 70, 80, 90%. Don't get caught up in it, right? I recently done two valuations and had $400,000 increases on both. So keep your powder dry. Here's what you got to do. So what do? Number one, speak to your finance broker and go and get your loans assessed ASAP. Do it today. Next thing you do, see if you can raise your rents. If you're a property investor already, go out and put your rents up. I just jumped the rent up on one of my properties by $80 a week. Got the old interest rate covered all day long. Okay, keep a good handle on your cash flow. Keep yourself employed, be smart with your money, always keep the cash buffer. You know what I bang on about all the time. And if you're not an investor, get started today. All right, folks, that's just a short shout out. Don't panic, don't stress, don't watch the media, and hopefully you'll be fine. Okay, talk to you next time.